Hey, what's happening, guys? We're recording here. So what I'm going to do is go look at this video right here, and this was my session today. So let's go through this video, and we're going to see a few things here about today's price action. So I'm going to be forwarding through some of these trades. So as you can see, we're in this sort of range here. You can see we're bouncing off that view up multiple times, and then sooner or later the market moves higher above these 500s. We get a bull break. That's a bull break. And then we have some short consolidation. I'm thinking about getting short this market right here because I'm seeing this sort of pattern where we have a type of bull breakout sort of accompanied by another low volume pullback. All right, but the thing is, what I got wrong here is that this volume was nothing special anyhow. So I think I acted slightly on impulse to enter this trade here. Let's take a look at how this follows through here. Now just be patient here and take a look. Watch this here. Look at how it's creeping its way up to these 16s, and just watch this. 15, 16s, I refresh the chart, and sooner or later we push it. 18. Now take a look, keep an eye on this. 1850, we traded it just a little bit. That's really small size, nothing to worry about. And then boom, market trades at 540, and it gapped to that price right there. My stop was at 25, and this market gapped up to 37 or something, and I got stopped out at 34.75. Again, let's just replay that. Small size, really tiny size. We traded up 1850 a little bit, and then all of a sudden we see something happen that's very bizarre, and that the whole offer gets swept up with massive block orders. You saw that? All of that? This whole thing right here that just came through, and that right there took me out of the trade at a 2R loss because it skipped my stop completely. Stop was at 25 like I showed you, and then we had that happen. So that's the definition of getting wrecked. I decided to take a short on the first little pullback, and then sooner or later I get stopped out as this market moves higher. But take a look here. As it moves higher, it goes really slowly, and then it sort of moves up against me a little bit. Now look at how this upside pressure gets answered. Weak sellers, and we're trading at higher prices right away. Again, just watch that flow again. We're seeing these buyers hit into these offers here at these 37s. Sooner or later they're hitting into the higher 30s and then 40, and then I'm stopped out right here. And then I'm out of the trade as we hit 40. Now let's look at how it trades now as it's hitting 40. So a problem with me is that when I was trading here, you get so focused on the fact that you lost money on the trade that you lose consciousness of what's actually happening now. You're not really viewing the market as totally biased. So we're seeing a bit of aggressive sellers into those bids. It's more than what we've seen so far. So I decided to take a sell right there. And we're seeing 36 to 35, and honestly, I don't know if you noticed it, but the tape started to behave a little bit different in all of this. It's sort of acting more aggressive at this point, and now as you can see, it's doing it on the opposite side. It's moving back aggressively up to these 40s, the top part of that trading range like it was at before, and now we're testing higher prices or not. That's going to be the question. So just look at these bids here as they're trading. We trade higher, take out a couple knots. Now we're trading back into this trading range. So here we see lower prices and the bids are getting swept. So right there, that's me in profit on the trade. You can see how the bids got swept pretty aggressively there. It's called selling. You saw that momentum. Let's repeat that sell momentum. Again, you'll see that on the tape like it's like a breath. Takes out those stops, trades lower. Look at how it's trading again, trusting with these 40s. Doesn't know what it wants to do. We start seeing some bid hitting just a little bit, and sooner or later we're trading at 34. Look at that. Boom, they swiped the bid all the way down to 30, 29, under 29. Now what's happening at this point is the longs are under pressure. We dropped to 27, back up to 30 pretty fast, and this is me looking to protect the trade at this point. As you can see, that was a bit of a bull trap, but these sellers came through aggressively on. There's not enough buyers to keep this above 43, 40 for that matter. So I'm short this market, and you can see me managing that trade right there. And let's fast forward the video a bit. So we trade lower. Look at that. So we have a second leg down at this point. My average is 36, and we're trading at 16. So I'm up 20 handles on that trade. You can see that. I mean, that point, look at this. I don't know why I was contemplating the buying right there. I was looking for a bigger move, and I should have just left that buy limit in and press enter and just do it, because you can see that we try to trade lower, and you're going to see this kind of move back up slowly. And let's watch how these buyers behave around these 14s, and you can see they easily push it up to 18, 19. So again, that was me just like not locking it in close enough. I have to trail those stops a lot more. That's moral of this. So like, look at this move I managed to catch here. This awesome first pullback after this parabolic move. Now this would have made up for the large part of the first trade, and of course I didn't take it. And this is me. You're gonna see me get stopped out break even after this pullback. And you see we get another pullback, and then I stop out break even out of the trade. So that's an example of a trade that is poorly managed. You got to take the profit when it's there. So that's me giving up 25 handles of profit like you saw there. And I short at 610. So you can see that we're in this trading range. We're not moving higher. A bit of resistance, trading range, trading range, trading range, trading range. 610, and sooner or later we break bearish. Look at that. Big bear all the way down to 600. So that's 10 handles of profit right there, first of all. And then keep watching. You're going to see it moves under 600 pretty quickly. And we're going to see it trade all the way down to 690. Get a little bounce to 94, 95. And then we go for another leg down right away. So that's an example of the bears coming to the party right there. The bears are coming to the party right here. And I was short from 610. And did I take my profit? Nope. But what I did do was I trailed the stop down to here when I really should have been trailing stop down to here, if you think about it. Because look, I'm short from 610. Dude, when are you going to take a profit? If you don't take a profit now, you're the dirtiest pig in the history of this universe. So I'm the dirtiest pig in the history of this universe. Take a look. And the market trades, and the market trades, and the market trades. And I put my buy stop all the way there. And again, short from 610, putting my buy stop at 590. So right now, what I show on the screen is that I want to lock in 20 points. I'm up 50 points and I only want to lock in 20 points. What is wrong with me at this point? Am I on planet Earth, or what solar system am I a part of? So there's me being a pig and getting stopped out. Boom. All right, so I'm starting to see what part of the problem was today, and it was the fact that I didn't take my profits when I had them. After having two losers like this, the smarter choice would have been to take that $40 win right here, and that would have put me down only $20 on the day, which is only 1 R. That was the smarter choice to make, but I failed to make that choice because I was thinking that the market was going to give me even more profit. So that was a bad choice of not just taking the winner at that point. I wanted to be risk taking when I had the winning trade, but based in the context that I had two losers previously, and obviously the first loser that I got stopped out in that crazy way, so it counted for 3 R's right here. This one, when I had those 2 R profits, I had to just take it, and that was it, you know. And again, after that, you can see there's 1, 2, 3 trades I take that all gave me profit that ended up with a break even. That's not so fun when you think about it. And at this point, the reason I kept trading generally is because the balance in the margin account was just over 2 grand. And with IBKR, when your account dips under 2 grand, it becomes a cash account. So I said, there's pretty much the opportunity for 2 more trades. And given the fact that I'm already down 200, do I really feel like waiting till tomorrow to take these 2 trades? Or am I going to risk the last 2 trades right now? And obviously knowing, like any delinquent, you want to do those 2 trades as soon as you perceive the opportunity, when you're in that opportunity flow, right? Anyhow, so as the market gives you 10, 20 handles, 30 handles of profit, you need to be in the opportunity flow of trailing that stop. You know, if the market's giving you 50 handles of profit and you're at 1247 on a Monday, are you really going to let the market come halfway back to your break even? Or are you going to trail a stop closer and lock in, say, 40 handles? And that was the mistake, again, that I just kind of had a trailing stop in, but I didn't trail it close enough, nowhere near close enough. And again, that's important. So then this is me trading later in the day, and again, losing money, making money, losing money, losing money, making money, break even, making money, break even, making money. 3 in a row there. Not for 1 R gains though. They were smaller gains. You can see these ones right here. These little $11, $16. These are the kind of scalps I'm talking about, that we could have had a bunch of those earlier in the day. But again, failed to lock in those trailing stops fast enough. And then again, finishing here with the remainder of the last 2 bets. So I managed to stay alive here for 35 trades in total. And basically I blew up $220 of capital approximately. So if you think $20 per trade, I would have been entitled to approximately 11 trades. But as you can see, I didn't lose 11 trades in a row, but I lost the equivalent value as if I would be risking $20 for 11 trades. But I really took 35 trades. So that's an interesting way of looking at it too. So, and that's why if you look at the win rate, loss rate here, which I'll show you right now, you'll see that the win rate was actually positive if you included all of these break evens, starting from this one right here, the $2 loss. The win rate, if you calculate the win rate starting from here, which would calculate 18 winners for 35 trades, my win rate was actually 51%. So that's pretty good. And you can see that the average return was actually positive. So that's pretty good too. Now again, the thing that killed me was that I took a lot of these 1R losses during the day, and that's what killed me pretty much. So if I were to adjust these numbers as the break-evens not counting as winners, because in this case I counted the break-evens as winners, just for the case of this example, the win rate would be a lot worse and this average return would obviously be negative. That's the P&L on the day, minus $234. So I'm trading back in the simulator the next few days, guys. And that's the way it's going to be. I'm going to take it slow here. And as you can see, a lot of trades in the day. And what's really interesting, I didn't go through all of the trades with you, but what's really interesting is the fact that I was able to take 35 trades today. And there was some bad trades and there was some really good trades. So that's going to be it for today, guys. And catch you later. Take care.